Hi everyone, welcome to Vantage Live analysis session. So for today, we will be covering on dollar yen. I'll just give it about 1 to 2 more minutes for more people to join us before we get the session started. At the same time, if you guys have any questions, right, please feel free to put them under the questions chat, either the chat box or Q&A box. So for today, we will be covering mainly on dollar yen, dollar index, as well as gold. Right, so along the way, if there are any questions, if there are any charts that you want us to cover, do put them under the chat box and Q&A box. Okay, so I see that, some of you raise your hands, right? So you don't need to raise your hands. If you have any questions, just type it under the chat box or Q&A box. Let me see, I'll activate this. Right, so you should be able to type your questions under the Q&A box. Okay, so I have both of the boxes, the chat box and Q&A box open. So if you have any questions along the way when we're running through the session, please just feel free to type them under either of the chats. Okay, so let's just give it about 1 more minute before we kickstart the session. For those of you guys who want to take a look at the previous recordings, we actually have the sessions recorded on YouTube. So you can just go to Vantage Markets YouTube page, right? And that should bring you to the recordings of the earlier sessions. Okay, so let me just share my screen on that. Okay, so for those of you guys who want to access the recording, you can just go to vantagemarkets.com under education and tools and just search for, vantagemarkets.com without this. Okay, under education and tools, educational webinars. Right, so just scroll to the bottom of the page. So this is a schedule of our upcoming sessions. And then we have our previous recordings here. So you can just click on this view all button. It should bring you to the YouTube page. Okay, so you'll see the list of the sessions that were done previously, but you can access them here. Okay, so let's kickstart our session. So for today, we will be covering mainly on dollar yen. It's a live analysis session, right? So for those of you guys who are here with us or who just joined us, right, I have the Q&A box and chat box open. So just feel free to type any questions or any chat requests under your question tab. So just a quick introduction of myself. I'm Lee Sing. You can also find me on LinkedIn. So if you're watching a recording of this, right, please feel free to reach out to me on LinkedIn if you have any questions. Just a quick disclaimer. The information presented here is not to be treated as investment advice. It's for educational purposes only. So this is the agenda that we will be covering for today. Right, so first we will take a look at the key economic events. So if we see any FX charts for now, right, I think it's been pretty choppy. Markets are on the sidelines waiting for the FOMC meeting minutes. So we will take a look at the key upcoming events, right? So these events would indirectly impact the central bank's interest rate decisions, right? So when we take a look at, for example, economic growth, it can be measured by GDP, retail sales data, right? Consumer spending. So all of this data, right, if it points to weaker growth, but inflation is still sticky or it still remains high, right, then indirectly it forces banks to raise interest rates to fight inflation, but there's also threat of slower growth or recession. So these are data that we want to keep a close watch on, right? Because it can indirectly influence the interest rates paths of central banks. So that's on the key economic events. We will take a look at the trade setups, right? So mainly for today, I want to focus on dollar yen. And I'll be taking a look at DXY and gold. So these are the 3 setups that I'll be looking at today, right? If you have any other setups that you want us to take a look at, right, just put your request under the tab box. And then, of course, along the way, we have our Q&A session, right? So the chat box is open. So if you have any questions when we're going through the session, right, please feel free to type them under the chat. Okay, so let's take a look at our trade setups, right? Actually, before that, let's go on to our economic calendar first. Okay, so you can see that this is the economic calendar, right? Usually I alternate between Forex Factory or economic calendar on the Vantage website. So if you are using the Vantage website's economic calendar, you can just go under Education and Tools, economic calendar. So the main difference is that this shows not just the G7 currencies, right? They have the emerging market currencies as well, right? So we have a more concrete economic calendar here. Whereas on Forex Factory, these are mainly the G7 currencies, right? So including the Chinese yuan, right? So you can see these are the main ones, and franc. So if you want a more concise one, right, you can actually use this. For me, I filtered according to the high impact and medium impact news. So the ones, the red and orange boxes that we see, right? So those represent the high and medium impact news. The yellow boxes and the gray ones are the lower impact news, so I won't be focusing on that. So this is what we have for the coming week. You can see that for the data that was released beforehand, we have mainly data around euro and dollar, right? So we can see for dollar, manufacturing PMI and manufacturing prices, right? So there's manufacturing sector itself, it's weakening, right? In fact, it's below 50. So 50 itself, it's a benchmark, right? If it's above 50, it represents expansion. If it's below, it's a contraction. So manufacturing industry itself, or the manufacturing sector, it's weakening for the US economy. We have Aussie, right? So Australia RBA, inflation, it's still sticky, right? So in this case, they kept interest rates constant at 4.1%. We have the RBA statement, right? So this itself is a reflection of the RBA's rate path. So if markets are expecting RBA to continue raising rates, then in this case, it will provide a boost for the Aussie, right? So imagine if the rates, if other central banks, right, are on a pause, or they are adopting loose monetary policy, like the Bank of Japan, right? So if you take a look at Bank of Japan versus the Fed, right? Of course, there's a really big difference because Bank of Japan, it's still in the negative rates policy territory, whereas like Fed in this case, they are raising rates to curb inflation. So when there is such a huge difference in interest rates, that's when, you know, investors in general will go for the one, right, that pays a higher interest rate and then use the lower one as a funding currency. So in this case, they're going to buy the dollar and sell the yen, right, which also explains the move up on dollar yen. And then we have the yen. So yen itself, Chinese yuan, right? This is the Caixin Services PMI data. You can see that it also weakened down from 56.2 last month. In this case, right, Chinese economy, the recovery, it's a little bit weaker than what was anticipated. But in this case, what it also affects, right, it's of course China itself, it's a large trading partner of Australia and New Zealand. And these are also risk proxy currencies. So when Chinese economy weakens, right, then this would also affect the Aussie and Kiwi. One, it's because they are trading partners, right? One of the largest trading partners. And the second thing, it's also when there is a weaker growth, right? China itself, they are one of the top crude oil importers, right? So that will also affect oil prices. It's also a reflection of demand, right? So in this case, when Chinese economy weakens, right, if we talk about it just from a risk sentiment perspective, right, this will also impact the market risk sentiment. So I'll cover a bit more on market risk sentiment in a moment, right? And then you can see the upcoming ones, right, which probably explains the choppiness that we're seeing in FX markets these days, would be our FOMC meeting minutes. So this would be one, right? So looking at around two more interest rate hike for this year. So that's what markets are pricing in, right? And then following that, we should be seeing a slowdown in rates, right? Especially when the growth it's not really catching up. And then we have, of course, a labor market. So far, the labor market data shows that the US economy is still resilient. So this would provide more insight as to, how resilient the US economy is, or rather the labor market, right, in response to this higher interest rates environment. And then, of course, on Friday, we have our CAT data, right? So this is also on the labor market. So these are the upcoming news events. You can see that the main ones we would probably be seeing quite a bit of move on would be the dollar as well as CAT, right? So if we take a look at dollar CAT, right, that might be one. Okay, so now that we have covered the major economic releases, let's take a look at our charts. Okay, so before I take a look at our charts, right, I want to cover a bit more on the risk sentiment since I briefly mentioned that earlier, right? So for market risk sentiment, the idea is that generally, right, there are a few ways we can measure market risk sentiment. So one of it is taking a look at the dollar index, right? So DXY. So DXY itself, it's a measurement of the dollar against some of its largest trading partners, right? So for example, the dollar against a basket of currencies like your euro, pound, so on and so forth, right? So the major currencies. So in this case, you can see that dollar index, right, itself, it's also seen as a safe haven. So what we mean by this is that when it's a safe haven, right, when there are times of uncertainty, like what we are seeing currently, right, we are seeing a lot of uncertainty in terms of the relations between US and China. We're seeing trade tensions. Right, so in this case, when we are seeing this kind of market uncertainty, dollar index tends to appreciate. So this is also the reason why, right? When dollar index appreciate, of course, this is also it is also caused by other factors, right? But in general, when dollar index appreciate, right, this could be a reflection of a weaker or more risk-off market sentiment. Right, then the other one is, of course, the SPX. So SPX is a measure of the world's the top 500 US companies. So in this case, for the SPX, right, if stock market is rising, it tends to mean that investors are more optimistic about the economic outlook. If it's falling, then vice versa. Right, then of course you have your VIX. VIX itself is a fear index. If it's high, usually it means a higher level of uncertainty in the market. So then investors will go to safe haven like your dollar index, your gold, right? So those are that. And of course, the last one is your US 10-year Treasury U, right? So the idea behind this is that US 10-year Treasury U, it goes in the opposite direction as US 10-year Treasuries, right? So when your US 10-year Treasury, these are basically, think of them like loans to the government. So when we think of them as loans, right, the risk of default is extremely low, right? So because these are loans to the government. So only when it's when there are a lot of pessimistic outlook on the economy, right? This is when demand for the US 10-year Treasury would rise. And because the U moves in the opposite direction, right, then U's would drop. Okay, so those are the main factors that we can consider when we are measuring market risk sentiment. Okay, so with that, right, let's go on to our chart. Right now, I'll focus on the dollar index first. Right, so for this, we'll be taking a look at mainly on the dollar index, not so much on these other factors. Right, so dollar index more from a technical perspective. So this is dollar index on the monthly time frame. Right, so I'll just share a bit more on like how I analyze the charts, right? So generally, I will take a look at the higher time frames first. So the monthly just means that one candle represents the movement of price within that month. So imagine if prices are moving like this, right, for the whole period, the period of 1 month. What this does is that it captures the open, high, low, and close prices for the month, right? And then it generates one candle. So what this also means is that when you're on your higher time frames, if you're on your monthly or your weekly time frame, right, it's clearer, right? You can see the levels are clearer, and there's a higher chance that these levels will be respected, given that this whole candle that was being formed, right, represents the movement of prices within the month. So these levels are likely to hold as compared to, let's say, going on to the lower time frames where prices might not respect these levels as much. Okay, so we can use the monthly, weekly, and daily as an indication of a potential direction that price might be heading towards, and the lower time frames for our entries. So with that in mind, right, let's take a look at our monthly time frame. So this is the picture on the monthly, or the graph on the monthly. You can see that where we are currently, prices are sitting on a support level here. If I extend this across, right, this zone. So instead of looking at a specific level, right, I work with zones. essentially an area where price interacted with multiple times, right? So we're seeing that a respect of that zone. So in this case, you can see that price came in. We saw that sharp rejection once over here and then again over here. So this is twice. And then even when price broke above it, it retested again as a support before closing higher. And then once again, we're seeing the consolidation around this area, right? So for me, the picture on the monthly, it shows that prices are currently sitting on the support zone. So what is important to note is that if we're seeing an area here where prices are currently testing, right? If we do see that this support zone is going to hold, what we can notice on the lower time frames is that price tend to consolidate. So prices tend to consolidate here before it moves in the direction. So now that we have understood roughly what are the levels like on the monthly, let's go on to the weekly time frame. So on the weekly time frame, right, notice that with this move down, the push down to the monthly time frame, this monthly support zone, the purple zone that we've highlighted, we can see that at least on the weekly, we are seeing some kind of support level forming here, right? So we are seeing price coming in to form a low over here, and then another low. But at the same time, right, we are seeing resistance because it's also being held under a descending trend line. So what we can infer from the weekly is that prices fail to push to form a new low. So this could be an indication that the downtrend that we are seeing on the weekly, right, with lower lows and lower highs, we could be seeing a potential reversal from here. But at the same time, we want to recognize on the weekly time frame that there is a descending trend line, and this resistance, which is the last high that we have observed here, right? This resistance that price needs to overcome before it could push to the upside. So in order for price to respect this monthly support zone and continue higher, we need price to break above this descending trend line first and also above this highest resistance area that we have here. So that's the picture on the weekly time frame, right? You can see this zone here. So let's move down to the daily. So on the daily time frame, we can see the consolidation, right? So if you take a look at the daily zone, we have on the daily price coming in to form a new low. You can see the support zone that we highlighted on the weekly previously. Price coming in to form two equal lows. And what happens after? We saw that consolidation here. So in the price action webinar I covered earlier, right, I mentioned on market structure. So the idea of market structure is that if price pushes into a support zone here, so let's just take this example, right? This is a really clear example. We can see that when price pushes into the support zone, you can see coming into the support zone, it is actually forming a bearish structure, right? How so? If I put it in close, it's probably clearer, right? So you can see that when price pushes into the support zone, we have lower lows and lower highs that are being formed, right? If I trace out the movement, you can see clear lower lows and lower highs being formed, right? So just mark out the significant swing points, the highs and lows. But what happens after this, right? We have this low that's being formed. So the assumption is that if the downtrend, it's the continue, price should continue to push to form lower lows and lower highs. But rather what happened over here is that price formed an equal high, and following which it broke above the high, right? So what this suggests is that there's a potential change in trend. More importantly, it's aligned with your higher time frame because this purple zone that we've highlighted, it's the monthly support area. Okay, so with that in mind, right, there's something that we would like to highlight on the monthly picture, on the daily picture, right? So we're seeing that change in trend, the change in market structure, with price coming in to test the support level on the daily time frame, right? Again, why this is a support level? Because price faced resistance twice before a clear break above it, and currently it is sitting on this zone. So I would say that the range on the daily time frame, it's within these two areas, right? On the higher time frame, it's more bullish, but we need price to break above the 10380 zone, this resistance area here, before seeing more upside. So on this note itself, right, I would also like to highlight the resistance area here, right? So notice on the daily time frame, we have the doji, right? So for those of you guys who are not familiar with dojis essentially candlestick patterns with relatively narrow body, right? So the body itself represents the open and close price. So what does a narrow body mean, right? If it has the candlestick has a narrow body, it just means that there's a lot of indecision. So markets cannot decide whether it's bullish or bearish, which is why your open and close price are relatively near one another. So in this example, right, you can see that this is an example of a doji. So how I would interpret this doji It's that you can see here, right? It's basically a trading range within the lower time frame. So prices are trading within this range. There's no clear direction before this strong breakout represented by this bearish candle, right? So this bearish candle that comes after. So you can see that what happens, right? For those of you guys who trade ranges or breakout, essentially what this shows is that when prices are trading sideways here, and then it breaks below the zone, it could retest it again as a potential resistance or supply area. Right? So if you're unclear of highlighting ranges on the lower time frame, one way would be to take a look at the higher time frames candlestick patterns. Just highlight these zones, especially when this doji is formed, right? And following that doji is actually a strong breakout. You can see this candle with hardly any wicks. So it shows that there is a clear direction. There's enough sellers to push prices lower. And what this also suggests is that this doji might potentially be a supply area that we need price to break above before moving to the upside. So the daily time frame, right? So I'll just highlight this. And on that note, I would like to so focusing on this doji, right? Let's move to the lower time frames. So recall on the lower time frames, right? I talk about how dojis are basically trading ranges, a specific range that price traded within before it broke below, right? So if you notice on the 1 hour or even slightly further down on the 4 hours, right? You can see just drawing a horizontal line across. This is basically the range that prices were trading within. You can see this range, right? This box that prices were trading within before it broke below and retested as a resistance, which is why when you highlight dojis on the higher time frames, right, they basically represent the same on the lower time frames, trading ranges before that breakout. So what this also shows is that if we need price to continue further to the upside, right, or if we're playing any short-term move on dollar index, right, this is a resistance area that we need to watch. Okay, so that's my view on dollar index. Right now, where we are, at least on the 4 hours on the daily picture, you can see the most recent move is still bullish, right? Prices are still forming your higher lows and higher highs. If you take a look at it in market structure, we have a clear move to the downside and then price forming the last high over here in terms of market structure. And then price broke above it. So this break in structure shows that there is movement to the upside, and more importantly, it's aligned because on the daily time frame, prices are currently testing the daily support, right? We marked this out as a daily support earlier. So remember over here, right, we saw that resistance and then price failed above it. So this is the daily support. And whether price would just bounce off this daily support or continue much lower, we wouldn't know. But you can see that in terms of market structure on the lower time frame, this is a clear sign, right? Because price stops making lower lows. More importantly, it broke above the last high, which is this here. So once price breaks above structure, pulls back, then this shows that the 4 hours, which is now bullish because it's because of the market structure, right? So 4 hours is bullish. And more importantly, it's aligned because it is sitting on the daily support. So it shows that prices are respecting this daily support with the change in market structure. Okay, so right now where we are on the 4 hours time frame, you can see that prices are still in ascending channel. If I just remove the latest price movements, you can see prices are still in an ascending channel here. Just remove all this. There we go. So this is the ascending channel. We can see that prices are still holding in an ascending channel. So it's currently at the support zone. So we could see more upside to the resistance area here. Okay, so I think we could see short-term movement to the upside. But again, right, we have to be more careful because of the FOMC meeting minutes and dollar labor data that will be out, right? We could be seeing much volatility. But overall, the direction that we're seeing, at least prices are still holding above support zone, right? So we could see potential to the upside. Of course, if price breaks below this low, right, we could see a potential change in market structure. But as of where we are now on the 4 hours, it's still showing us higher lows and higher highs. So currently prices are testing the support zone here. Okay, so that's the picture on the on dollar index, right? Let's take a look at another setup that we have, which is on dollar yen. Right, and if you have any other chart requests as well, right, do put them under the chat box. So we will do the same, right, walking through the whole thought process with starting from the higher time frames. So on the higher time frames first, on the monthly, you can see that on dollar yen, we have a potential support area here. Right? In fact, prices are still slightly far away from this zone. And one interesting thing to note, right? So previously I highlighted dojis, right? So dojis being in ranges. So notice that this on the monthly time frame, what we have here, again, right? We have a doji on the monthly. And what happens after the doji? We have a strong bullish candle, right? So a bullish breakout of the range. So again, when we have these ranges on the higher time frames, a doji followed by a strong breakout, what this can suggest on your lower time frame is basically a range that prices traded within, right? Probably move sideways for a while before it broke above. So this can serve as a potential demand area. And this is where we are seeing that price reaction. Okay, so over here, you can see this doji. If I were to highlight the monthly doji here, you can see this zone. So price came in, tapped into this zone before it continued to the upside. On the monthly area, right, we don't really have any resistance except for this one here, this high. So this was a good 8 months high, right? So previously, the last time price came into this zone was in October last year. And then at the peak of it, right, we saw intervention by the Bank of Japan. So right now we're seeing a push up into these levels again. But in terms of the reaction, it might be slightly different, right? So back in October, this is when central banks are at the peak of hiking their interest rates, right? So recall over here, right, inflation was still sticky and Fed was extremely hawkish. But coming into this area, we can see that they're tapering down quite a bit. So in fact, we might be seeing less panic as compared to the first time the dollar yen reaches the 150 mark. So this is the monthly resistance area, right? Somewhere around 140, 150, I would say the magic number, right? So, but if you look at it just from a high perspective, anywhere around 148, 149. So that's the monthly picture, right? We don't really have much on the monthly. If we go down to the weekly time frame, you can see that it's been a really strong, dollar yen has been in a strong uptrend, right? Hardly any pullback, not even on the weekly picture, right? We're just seeing this strong move up. And also partly driven by fundamental factors, right? Fed being extremely hawkish and Bank of Japan being dovish, right? No signs of hiking rates at the moment, right? Inflation, whereas inflation for the US economy still remains sticky. So this is the picture on the weekly time frame, right? Not much difference, I would say. In terms of where we are right now, right? You can see that on the weekly, we have a resistance turn support level. So price coming in to test this zone, again, another doji here, which serves as a resistance area before price failed. So this is the resistance zone, right? So if we stretch this across, you can see that price came in and acknowledged this zone as a resistance before it continued to the upside. So this is the picture on the weekly, which means that if price comes into this zone on the weekly, right, we have potential to push higher. But as to whether price would respect this zone, we need to look at our lower time frames, right? If it comes in forming lower lows and lower highs, and then we see that change in market structure, as what we observe on dollar index, then there's potential to move to the upside. But as of where we are on the weekly right now, right, this is the support zone. Now let's move to the daily time frame. So when we're on the daily time frame, you can see that we're seeing pretty muted growth over here, especially this area, right? So pretty much consolidation around this zone. And right now, I think markets are also looking at FOMC meeting minutes, right? Trying to price in, the extent of the rate hikes, depending on the data. If you take a look at it from a technical perspective, on the daily time frame, right? This consolidation that we're currently seeing, if you take a look at what we are seeing here, right? This price action, we see price consolidating around the zone, breaking above it, hovering as a support before it completely failed as a resistance. So right now where we are, right, if I were to extend this whole zone across, or even if I were to put it in close, you can see that I can draw a horizontal line across that essentially divides this chart neatly. Right, so if I draw a horizontal line across, you can see this area. Right, so let me just remove the marking. Right, so price coming in to test this zone as a resistance and a support area. And currently it is holding below this zone as a resistance. Right, so this picture on the from a technical perspective, right, currently prices might be facing some kind of resistance here. Okay, so this zone that we're seeing here. Again, as to whether we'll see a reversal from here, a lot of it depends on the lower time frames, right? So if we're on this zone and we're currently seeing clear market or consolidation before that break, then we could be seeing a deeper push into this support zone. But as of where we are, right, we need to look at the lower time frames, right? So if there are no clues as to a change in market structure, price could just continue to the upside. So that's the picture on the daily time frame. Now, if we move to the 4 hours time frame, what we're seeing here, if you're on the 4 hours, right? So notice maybe just let me just move back slightly, right? So back on this area, this will be clear. So you can see that on the 4 hours time frame, when price pushed into the weekly zone, right? So we have a weekly support zone, the weekly doji that we've highlighted here, right, earlier. So if you recall, on the weekly, we highlighted a weekly doji, as the support area. Right, so recall this weekly doji that we have highlighted. Sorry, the monthly, not weekly doji. This monthly doji here. So I'll just put this in purple so that we can take a look at that market structure change on the lower time frame. So when price comes into the weekly time frame, right? So if it starts pushing into the weekly zone, so from here onwards, right, we can see when market comes into this zone, a respect of this area, right? So when market starts respecting this area as a support, what happens is that we notice that change in market structure, right? So if I were to put or just mark out the highs and lows, mark out the significant points, right? So I trace this whole movement. You can see price forming lower lows, lower highs, coming into this zone, consolidating, forming your equal lows before it breaks above structure. And this break above structure, right? This is a sign of change in market structure. It's a sign that prices are respecting this demand area here. And the reason why I'm bringing this up is because we might notice the same again for where we are, what we are seeing currently, right? So if prices are respecting this resistance area, you can see right now we're still seeing that consolidation. You don't have clear market structure being formed, right? So prices are still forming your lows, right? And these lows are pretty resilient. We are not seeing that clear break of this. It seems to hold, sweeps liquidity quite a bit here, but it's not breaking below this zone. So unless we see a clear change in market structure, right, what's likely to happen is that we could be seeing movement to the upside or maintaining this bullish structure. We could probably see consolidation, right, and volatility in the market as well with the FOMC meeting minutes release. So this is the picture on the 4 hours. Currently, we are still holding it on a support level here. If you notice this area, right? So multiple rejections of this. If you put these levels in close, you can see this area as well. Basically, this horizontal line where prices respected this area multiple times. So just based on the market structure alone, right? As long as price holds above this, we are seeing limited upside on the resistance area. But once this zone is broken, we could see a further move up. Okay, if price breaks below the support area here, then there's a change in market structure. We could be expecting a deeper pullback on the 4 hours time frame. So that's the picture on dollar yen at the moment. You can see in terms of the support levels. And in terms of where we are, right, looking at technical indicators or retracements. So maybe just a quick recap on Fibonacci retracements, right? So if you want to look at the webinars on Fibonacci retracement, you can find them on YouTube, but I'll just do a quick recap on it, right? So essentially the idea is that if you load a Fibonacci retracement, you can see the default settings. It's that we have all these levels, right? So the 38, 61.8, 50, 23. So all these levels here. And what we're trying to find is that within the whole movement, so we're trying to identify impulsive move. So if price moves up strongly and does a pullback, right, we will try and use the retracement level using the lowest point as the reference point and the highest point as the second reference point. And we're trying to find if there are any levels that line up with our zone. So you can see this move here, right? So this is the strong move up. You can see price consolidating and then a move up here and a pullback. That's one move that we can check for any retracement. So you use the lowest point and the highest point. And you can see that 23.6 is still somewhere here. So much lower. Right, the thing with Fibonacci retracements is that when we identify these areas, right, we want to ensure that these levels are in line with the zones that we identified, not the other way around, because these levels, you can see at almost every interval, we will be seeing a level here, right? So we want to ensure that we are trying to find these zones that price might potentially react off and using this retracement levels for them. So the other retracement we can check would be from this move. You can see the strong move up here and that pullback. So the lowest point and the highest point. So you can see right now where we are, right? We have our 23.6 retracement. I'll remove the rest because it's distracting. So I'll just keep the 23.6. So this is the support level, also in line with the swing low, right? Or this low that we've highlighted. Okay, so we need price to break below that for a further move to the downside. If not, looking at just the 4 hours, right, prices are still holding in its bullish structure. Okay, so that's the view on dollar yen. Right, if we do see a move to the upside, you can see that this is the daily area, right? Then in this case, when price moves to the upside, it breaks above this. This can hold again as a support for continuation to the upside. And the next resistance area we have in mind would be our monthly time frame, which is much higher. But of course, right, this itself, it's a historical level that happened around 8 months back. So it could be driven by fundamental factors as well, right? If we see a potential intervention again here, right? Of course, then that would impact price movement. Okay, so that's what we have for today, right? So for tomorrow, we will be doing our educational session. Right, and if you want to sign up for the sessions, you can also go to vantagemarkets.com/webinars. If you have any questions, right, please feel free to either email us at support@vantagemarkets.com, especially if there are questions related to account openings. If not, right, if you have any questions or any chat requests, right, do type them under the chat box or Q&A box. Okay, if not, right, that's all that we have for today. Okay, I see that we have no other questions, right? If we have no questions, then that's all that we have for today. Right, thanks everyone for staying with us till the end. Have a great week, right? A great trading week, and we will catch you guys again tomorrow.